Hello, Bruce here. Today's video talk about NetLink NBN, the fiber with smart nation. NetLink NBN Trust is listed in the SGX. This is a very popular SGX dividend stock. 5%+ yield is expected. Fixed income alternative, stable even in a bad environment like FY 20, last year COVID-19. Still performance is good. Beat against the STI index. Mainly because of this asset infrastructure. Yeah, this is an infrastructure trust. Is where the really strong cash flow even in a bad environment. What kind of infrastructure they have is a fiber network. Is basically a NetLink NBN monopolizes this fiber network in the Singapore. However, when I look at this year, 2021, 23 days a performance here. Gradually, stock prices went down from the 97 cent to the 95.5 cent, and also volume went lower as well. For example, January 7th start from the 8 million, then the 16 million, 10 million. However, just recently the 3 million, 7 million, 2 million, 6 million, volume definitely lower and the price lower. That's bad. And also is over 30% short happens found in the 3 days out of these 23 days. February 2nd, January 18th, January 7th, these 3 days over 30% short. And no share buyback, which means is a selling pressure is mounting stronger now. Then looking at the chart, this is the 50 days average line. This is a downturn trend. Then MACD is almost a break this one, but cannot break. RSI is below 50, 42, not good momentum. This price is suddenly up, but mainly because I think dividend day, ex-dividend day, November 17th came. Dividend taker just bought here, then the sell it. And the downturn trend is more deeper on this. So currently is now interest rate go up, especially the last week from the last week. That's why I just want to double check is that level is okay or not. Always read and trust this is the first question. Second, now COVID-19 recovery on track. 5G and the smart nation initiatives going on. Where is the growth on this trust, on this stock? Revenue, EPS grow. Can they sustain the current level of the dividend? These 2 points I just want to check here. First point, interest ratio go up. Here is the Singapore government bond latest yield is a 10-year bond is now 1.06%. Please look at this one. Year to date is actually 17 point actually the growth. This one a lot. Then the last week is a 6 point. So interest ratio come back. Recovery is from the COVID-19 come back. 1.06% now. If the interest ratio is going up, we're going to always check the debt level into the interest coverage here. When I look at the NetLink FY21 first half is a 666 million gross debt now is bad compared with the last year is a 30 million up. But good news is that net debt is down, cash is up, so that's okay. Second is the net debt EBITDA is only 1.74, only 2 years they can pay out a debt. And the EBITDA interest ratio is 13.8. That's nice. And also when they consider their background, 25% Singtel and the Temasek, so they can definitely refinance, require a first year later. It's no problem at all. So my first question is that level no problem. One thing, just a concern from this data itself is about net asset per unit. Is that this is every year went down. Of course, the depreciation happened, net asset values went down. However, this is gonna be correlated with a stock price. Stock price is 95.5 cents. Now is 73.3 cents. Now here went down. That might just concern it. Anyway, first question is okay. Second is does NetLink grow? When I look at the NetLink first half P&L is revenue went down 2.5%. That's bad. Even the infrastructure trust is it should be stable. Hope is more people gonna use the internet. I hope is the revenues goes up, but went down. EBITDA went up. EBITDA margin went up. Profit before tax went up. However, when I look at the more detail, here is the government relief grants help EBITDA. So I don't know whether this number is actually the real number. I mean the real demand, real business. So I doubt it. That's why I don't know whether I can say they grow from the FY20 to 21. By the way, FY19 to FY20, they grow 5.6% revenue, EBITDA grow as well, EBITDA margin grow as well. That's my view from the FY21 first half P&L. Then I'll more look at the detail where revenue growth come from. This is their network. So NetLink has an infrastructure, fiber. Is put the fiber all under the ground, and this fiber is connected to the residential homes around the HDB apartment here, and also office here and on residential premises. This is a second business segment. Third is more like a non-building access point, which means a Wi-Fi hotspot, mobile base station, lamp post, those kind of a segment. Number 3 is number 4 is a manhole decks. That's a full segment, basically their basis of the business. Then each segment, how much each segment generate the revenue is the first most biggest one. 2/3 of their revenue come from the residential connection business. Then the 1.4 million users is a 13.8 Singapore dollars church. But not good news is already 88% penetration happened 1.5 years ago. How much growth potential they have, very limited. Then here, this is a NetLink data is FY20 to FY21 Q2 growth is less than 1% on that. Is 1.42 million to the 1.43 million. This is very limited. NetLink say FY20 focus for this year is connecting new homes in the household that are not on the fiber by initiatives such as the IMDA's home access program for the low-income household. This is not this is a minor one. Is of course minor but important, but not good for the growth factors. That's why my view in this is 2/3 of their revenue business portion is a little growth expected. Next segment, non-residential connection business here, 8.4% of the whole total revenue, 47,000 users, 55 Singapore dollars church. This one is worse, is that this actual negative growth from the 47.7k to the 47.6k users from the FY20 to FY21 Q2. That's not good. Then the FY21 focus on this segment. What the NetLink says is a customizing offering to the SME, improving a presence in the major data center. But I doubt this one is customizing over to SME. But SME, do they actually come to the office? Do they invest more asset on the office? COVID-19 afterward, corporate may reduce the cost of the office. I'm not sure how much growth potential here. And improving the presence is a major data center. Yeah, data center increasing, but I don't know how much big on this. So my conclusion, real growth expected in this segment. This 8.4%, 65.3% total, 73.7% portion. Their business is I cannot see the growth on this. SaaS segment is an NBAP non-building access point collection business. But this one only covered the 2.2% of the whole business. Only the 1,800 connection, $73.8 church. Where is it? Good news is year-over-year growth is 10%, but only the 10%. This 2.2% segment is so small. Hope is that this can be grow more 100%. I didn't see the outlook for the FY20 to FY21, FY21 to 22, 3 years plan, but I hope it is gonna jump up to 100%. If so, I'm convinced. What is that? Is so this one relevant to the 5G Smart Nation one. So this can be connected to the mobile base station sensors Wi-Fi spot. That's why is of course is a Singapore government now push like this 5G Smart Nation initiative. Singtel recently announced they started like a 5G network in the university, education sector, and also enterprise sectors, and rolled out maybe 2023 or 2025. I just want to know how much like size here, how big growth is in the when growth comes now. When I look at the FY20, our focus, their NetLink focus is making NBAP easier and faster to deploy. Yes, this aligns with my expectation. Faster is better. Preparing to support 5G infrastructure. Of course, is who's gonna actually drive 5G infrastructure is a Singtel, StarHub, those guys, telco guys is on the base of their demands is NetLink gonna actually prepare for the further connection. So they are basically preparing one. Is I don't know whether they themselves can drive the growth on that. Number 4 is dark manhole installation diversion. I combined this segment a total 13.6% of the total revenue. Why combine these 3 segments all like relevant to the construction work? Is during the COVID-19 circuit breaker, of course, the construction work is a whole. And a pushback and foreign workers is a manpower capacity issue also happens, and still delay. And I heard like this portion is a resume from the FY20 Q2. Then FY21, whether revenue actually covered by grant or not. If the government does not support, does not compensate, does not cover this portion, and I'm not sure whether even NetLink can sustain this revenue. That's my view. So looking at this 4 segment is my answer for the question is whether they can grow or not. Here, where revenue growth come from? Basically, the number 3 revenue growth come from. I'm convinced, but this segment is a risk for the revenue down. FY21, FY22 maybe come back. FY22, 23 is this maybe goes up, but how much is a question one. So growth factor is actually questionable. That's my view on this. I just want to double check any other risk we should be aware as well. Is actually this is a very important one because 80% of the business are regulated by WASCC weighted average cost of capital, which means is next year 2022 price will be reviewed for the period from 2023 to 2027. If price is down, distribution may be cut, obviously. Then the low interest ratio may negatively impact on this price. Under the current situation, is expected next year. I think the low interest ratio still continue. Is there are no much like a higher probability to increase the price, which means that not much growth expected. That's my view on this. Then what the analysts say target price. 6 analysis here, I can see their target price. The latest one is January 26 is a UOB Keihin is a 1.08. Actually, very bullish. Other is a December one is a CIMB 1.1, DBS 1.02, OCBC is at 1.1. This is nice. Then on its basis, what's my thought? What's my next action is I of course own this stock. But I think I'm going to sell half because of potential price cut in the 2022 review. I cannot manage on this. Then this impacts is a lot. Then half is of course I hold it just in case NBAP growth happens. Also like a manhole DAX, also kind of a construction business that come back so quickly. That make me have a confidence for the at least is a status quo on this stock on this company, even the future a little bit. But I'm gonna sell all if the FY22 outlook is not good or like especially that cannot see the growth in the NBAP. Of course the third scenario is the best one if the stock price is reach 1.08. That's gonna be great. Okay, thank you for watching my video, and a good deal and a good day.